Are you making this one big mistake as a business owner that the IRS hates to see? I'm Andrew Bosserman, tax attorney and founder of Boss Tax Law, where I help business owners navigate IRS issues. And in this video, I'm going to quickly talk about why you as a business owner need to separate your personal and business expenses. So I saw this scenario all the time as a former IRS agent. A business owner using their business bank account essentially like a personal piggy bank. They would pay their grocery bill out of it, maybe take their family on a vacation using business money, maybe even paying, reoccurring Netflix subscriptions or Amazon Prime out of it. The problem is that the IRS doesn't like this, and also it could potentially lead to personal liability for business taxes for you as the business owner. Because if the IRS doesn't see a separation between personal and business, then there could be a number of issues. Like I said, liability for business taxes, but also if you paid personal expenses with a business bank account and then deduct them, the IRS is going to deny those deductions, leaving you with a large tax bill. So the three most common mistakes I see in this scenario are a business owner using their business bank account to pay personal bills. So don't do this, because there's a way the IRS can hold you personally liable. It's called piercing the corporate veil. But essentially, this just means that there's not enough separation between you and the business. They see the business and yourself as one. You want to keep the business separate from your personal life so that you have limited liability. Also, the converse also holds. You don't want to use your personal account for business expenses. Say you're at the store and buying things for both, yourself and also for the business. You want to ring them up separately using separate credit cards or however you're paying, just to keep everything separate. And also, you need to make sure you have a separate business bank account. Even if you're a sole proprietor doing business out of your own name, you should have a separate account where all your income and expenses gets paid out of, so you keep that separation the IRS wants to see. So you're probably wondering, how do I make sure I do this? There's a number of steps you should do, but first, you should definitely make sure you have a separate business bank account and credit card for your business, and make sure that all income and expenses flow through there and not through any personal credit cards or personal bank accounts. The other thing you want to do is make sure that you are paying yourself the right way. So this means not paying personal expenses out of your business bank account when you need money for bills. Instead, you should either pay yourself a salary if you're a corporation or an S corp, or take owner draws if you're a sole proprietor, a single member LLC. And draws, that simply just means that the business is writing you a check, and that keeps a clear distinction between you and the business. Also, you just want to make sure you keep good records. Make sure you're doing regular bookkeeping and keeping expenses separate between business and personal, so that if you're ever audited, you have receipts, documentation, income statements, balance sheets, everything the IRS wants to see to show that you are treating your business like a real business. You're keeping it separate, and then there's no commingling between business and personal accounts. So you want to make sure you do this, like I said before, to avoid adverse IRS consequences. So that could mean disallowed deductions if you deducted personal expenses. Sometimes increased audit risk. If the IRS sees a lot of expenses coming out of your account, that could lead to audit risk because you're deducting personal expenses that are business. Also, potentially personal liability for taxes. Like I mentioned, the IRS is going to say, hey, your business and yourself, they're essentially the same. You're not treating them with the separation they require legally. So we're going to go after you personally for your business taxes. And finally, it's just messy and it's hard to keep good records. And also, if you're ever trying to sell your business, a potential buyer is not going to want a business that has messy records and these type of commingling issues going on. So These are all avoidable problems if you set your business up right from the start, and that means keeping it separate from your personal life. So if you have questions about how to set your business up properly, or you're running into issues with the IRS based on commingling business and personal expenses, reach out and I would be happy to help you.